Welcome to Stat Plus, the channel where we empower you to have smarter conversations on India's economy, markets, and policies. Today, we're tackling an important question: should food inflation influence monetary policy? With fresh insights from the Household Consumption Expenditure Survey 2023-24, we'll explore why essential food prices remain unaffected by interest rate changes and why it's time for a fundamental rethink of the RBI's inflation targeting framework. The debate on whether food inflation should be a key parameter in monetary policy decisions has reached the RBI's Monetary Policy Committee, with the government also weighing in with varied perspectives. This comes at a crucial time as we analyze fresh evidence supporting the decoupling of food inflation from interest rate decisions, available in the recently published Household Consumption Expenditure Survey by the Government Ministry of Statistics and Program Implementation. In our previous analyses, we've established that essential food demand is inherently inelastic. For example, people do not consume more cereals just because prices decrease, nor do they consume less when cereal prices rise. These essential food prices are predominantly influenced by supply-side factors such as agricultural yields, weather conditions, and government policies on trade such as import-export duties. Contrary to popular belief that essential per capita food demand has been increasing over time, we actually observe a marginal decline in real terms over the last 12 years. The Household Consumption and Expenditure Survey provides compelling quantitative evidence of this inelastic demand. Let's examine how. To begin with, the survey shows that monthly per capita expenditure stands at 2,142 rupees for rural India and 3,674 rupees for urban India at constant 2011-12 prices. Note that these figures include the value of essential items distributed under various government welfare schemes. Looking specifically at agriculture-sourced essential food categories, cereals, vegetables, and edible oil, we see the following patterns. In urban India, the combined expenditure on cereals, vegetables, and edible oil accounted for 356 rupees per capita per month in 2023-24. This is a slight decrease from 367 rupees in 2011-12. Similarly, in rural India, the per capita monthly expenditure on these essentials was 295 rupees in 2023-24, compared to 302 rupees in 2011-12. Contrary to popular belief that essential per capita food demand has been increasing over time, we actually observe a marginal decline in real terms over the last 12 years. This slight reduction likely reflects diversification in food choices and the introduction of alternative cuisines, rather than any fundamental change in essential food consumption patterns. While total demand across these categories would, very gradually, increase over time due to population growth, this is only about 0.8% annually, a meager rise that need not be addressed through the monetary policy framework. It should be noted that other food categories in the MPCE report, such as processed imported items and non-agricultural food products, were excluded from this analysis as they don't represent essential food demand. This analysis provides clear evidence that essential food prices, which presently have a major influence over the RBI's inflation targeting decisions, are actually unresponsive to monetary policy adjustments, given their constant demand levels across time. This calls for a fundamental rethink of our inflation targeting framework. The way forward is for the RBI to adopt an economy-oriented, core price index that focuses solely on those items, for which demand would be responsive to India's economic performance and market dynamics. This would allow for more effective monetary policy decisions, while the government can address food inflation separately through appropriate supply-side interventions as and when required. At Stat Plus, our goal is to provide you with data-driven insights so you can have smarter conversations, whether you're at work, school, the gym, or catching up with friends over coffee. What do you think? Should the RBI rethink its inflation targeting framework, or does the current system still serve its purpose? Let us know in the comments below. We'd love to hear your perspective. If you enjoyed this video, don't forget to like, subscribe, and hit the notification bell for updates on future discussions. Together, we can shape meaningful conversations about India's growth and policies. Stay informed. Stay ahead. See you in the next video.